Hello. Welcome to my channel, my dear friends. My name is Avilash. I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for next week after the Christmas. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. My dear friends, first of all, Merry Christmas to everyone. Tomorrow is Christmas, so enjoy to the fullest. And as you can see that on the Forex Factory economic calendar, that bank holiday. Yes, next week will be very slow, very sluggish, because the whole world is in party mode right now, festive mode right now. So there should not be any sharp moves on the market. So first of all, let's have a look at the chart of DXY. I will not take much time. So as per our expectation, DXY is still trading in a range. DXY closed at 104.32. So the range of DXY will still remain the same, 105 to 105.50 on the upside as resistance, and we have 103 to 103.50 on the downside as support for the market. This should be the range for DXY before 31st December, because till 31st December market should remain in a range only, because the volume of the market will be very less because of the less participation of the traders around the world. So as of now, I'm not expecting any big move, any sharp trend reversal on the chart of the XY. It should be trading within this range only. So let's have a quick look at the chart of gold. No doubt about the structure of gold, that gold is an uptrend right now. This is the overall structure. But this market is not suitable for swing traders and positional traders. After first week of Jan only, positional traders and swing traders should take an entry into the market, because right now the volume of the market is quite low. So as a result, we need to look at the market on a time frame like 1 hour time frame or the 4 hours time frame. The levels that we have been discussing for the last couple of days are still very much intact. If the market shows a downside, then the best support will be around 1775 to 1770. Then we have second support around 1766 to 1763, and the third support is around 1745. We have already discussed in detail in our previous videos why we are considering these three support levels. Okay, first of all, 1775 to 1770 because of Fibonacci 23.6% retracement level around this area, as well as previous price rejection around this area, plus we have 200 moving average. If we combine all the factors, then yes, 1775 1770 is a very strong support for gold if gold shows a downside. If that support fails, then the level of 1766 to 63 will come, which will also act as support here. And the last support will be around 1745 to 1740 because of Fibonacci 38.2% retracement level. Plus, we have strong price rejection around this area. So as a result, these three supports are very strong supports, presence of buyers on the chart of gold right now. But the problem is that the current market price is quite far away. So switching to a lower time frame is the only solution. So we need to look at the market on the 1 hour time frame. So market closed at 1798. This is the last traded price on the chart of gold. So the levels on the lower time frame are not very reliable in comparison to the levels on the higher time frame. Okay, so on the chart of gold, the next support will be around 1784. 1784 is the next support, because we can see the price has rejected previously around this zone here. But is this a very strong support? No, this is not a very strong support, because apart from price rejection, we do not have any other factor to consider it as a very strong support. So as a result, in case of a heavy downside by next week, we should only rely on the levels of 1775. But if the volatility of the market is low, if the market is slow, then we can definitely expect the market to bounce from the level of 1784. And on the other hand, after the market opening, if we see gold going up, then we have again minor resistance around 1804. I'm using the word minor here because 1804 is a minor resistance, because price has shown rejection around this area on Friday. Okay. Apart from that, we have also some resistance around 1808. Then we have some resistance around 1815 level. Okay, these are resistances we have derived from the Fibonacci retracement tool, because apart from the Fibonacci retracement tool, we do not have any other tool to use in this situation. So as a result, and we can also see that Fibonacci has worked very nicely. So in case market goes to 1805 level, observe the market first. If the market is slow, okay, we can definitely expect the market to reverse a little. You can look for a profit of 30 to 40 pips. In case market shows a good upside, if market shows a big green candle like this, obviously you should avoid taking any buy position. In that case, you can look for a sell position around 1808 level. When market will hit the level of 1807, 1808, observe the market. Okay, if you see that price is showing price rejection from above, if you see the price is struggling near 1808, 1809, you can look for a sell position. Okay, if not trend reversal, at least you can look for a profit of 30, 40 pips. Again, resistance will be around 1812. This will be a big level, 1812 to 1815. This is a big resistance zone. Here, apart from Fibonacci, we can also see that this level has also acted as a support previously. So previous support to act as resistance, plus we have got Fibonacci. If we combine all the factors, this is a good selling zone for us right now, considering the present volatility of the market. Taking the economic calendar, keep in mind that most of the banks will be having their bank holiday. Okay, and overall the participation of the traders will be also very less in the coming week. So please be careful. Do not gamble with your hard-earned money, and especially try to avoid breakout trades, because whenever the volume is very less, then usually market fails to go for a breakout or breakdown. Usually we get to see a false breakout. So as a result, you must be very, very careful, because when there is no volume in the market or very less volume in the market, you should be careful with your breakout and breakdown trades. If you see a breakout, then just wait for some time. We can wait for 2 hours, 3 hours, and just observe the market. If you see that market is trading comfortably above the level for 2 to 3 hours, then you can wait for some retracement, because after all, it's our hard-earned money, so it's our responsibility to protect it. And if we look at the Forex sentiment meter here, here's a beloved goal. We can see 51% retail traders have taken short position and 48% retail traders have taken long position. So retail traders are also confused right now regarding the direction of the market. So probably we will get a proper direction after the first week of Jan. Till then, be careful. If possible, do not go for a big lot size. Try to take a small lot size, and most importantly, give time to your friends and family. Bye-bye, take care, and Merry Christmas again.